Morning, everyone. Hope everyone's doing well. Happy Wednesday. What day is it? Happy Wednesday, middle of the week. Hope everyone is enjoying the week so far. There has been some interesting movement, and today we're going to keep talking about earnings, talking about the U.S. Strategic Petroleum Reserve. We're going to be talking about some of the UK economics and what's going down there. But yesterday we saw that Netflix popped out earnings, right? We had a pretty strong number on Netflix, sending the stock up 13% after the bell yesterday, and investors pretty much applaud the streamer's return to growth. The company added 2.4 million customers in the third quarter, expanding in every region and topping Wall Street's expectations. So the company also expected to add 4.5 million subs in the fourth quarter, and co-CEO Reed Hastings suggested in his mind the worst was over. So we'll see how this goes with Netflix, but so far they've done pretty well. It's shifting its focus to revenue as its primary top line metric, and Netflix is also developing revenue streams, advertising, and paid password sharing, where membership is just one component of the revenue growth. So Netflix also highlighted its profitability versus streaming rivals like Disney Plus, Discovery, Paramount, and they said that our competitors are investing heavily to drive subscribers and engagement, but building a large successful streaming business is hard. We established they are all losing money with combined 2022 operating losses of well over $10 billion. So Netflix annual operating profit in comparison is $5 to $6 billion. So pretty much a beat across the board revenue, earnings expectations, everything. Forward guidance is pretty solid, and we popped really aggressively on Netflix throughout yesterday's session right after the bell. And we also have Tesla earnings that are coming out today, which are going to be very interesting. These are starting to set the tone for more of the mega cap tech names. Obviously, they are in different industries, but we'll probably see some kind of similar results next week, which is going to be a huge component for the general markets movement. Now, we also had airlines that did fairly well. UAL popped out earnings yesterday, and they popped pretty aggressively here pre-market, while the market itself is actually down into some key supports as we start the session today. So we're going to see how that shapes up. Yesterday, we bounced really aggressively off the 3,700. And right now, as I check, we're still holding it temporarily here, and we'll see how that shapes up, but pretty strong, aggressive push. We'll talk a little more about the market and the futures themselves. But first, let's talk about oil sales from the U.S. Strategic Petroleum Reserve. They were only supposed to last until October and then through November, but the Biden administration today will extend the release into December. While the time frame keeps getting prolonged, the next 50 million barrels coming to the market will be part of the original 180 million barrels that were released first authorized in March. So due to inflationary shocks from the war in Ukraine, so far 165 million barrels have been sold from the SPR this year, bringing volumes in the emergency stockpile to 405 million barrels, making this the lowest level since 1984. So the extension intends to offset any market volatility that is expected once a European oil embargo goes into effect on December 5th, and to ensure prices from keep falling, right? The historic highs that recorded earlier this year. So it also comes after OPEC and its Russia-led allies agreed to slash output by a whopping 2 million barrels per day in November. And don't forget that the midterm elections are coming up this year. So I believe they're in November at some point. And the prices at the pump have been said to be a defining factor for any outcome, especially with voters worried about inflation and the economy naturally. So what remains to be seen is if the administration will go beyond its mega 180 barrels release, and if it does, how much further will it go? So we do anticipate there's a speech out of Biden coming in at 1:15 p.m. Eastern today, and reports suggest that the Department of Energy is also weighing limits on exports while looking to put a mechanism in place to replenish the reserves at a fixed price. So only time will tell if buy low, sell high strategy will work out, but the plan is to scoop up crude when it costs about $67 to $72 a barrel, and an approach that will protect taxpayers and help create certainty around the future demand for crude, quote unquote. So realistically, the expectations for oil into the end of the year, right, based on everything that we've seen, and of course getting colder and colder, are to rally. So I don't know these reserves right now. If I take a look at crude, might load forever. about $83 a barrel, right? Pretty significant drop after all of that news that came out. So they might get their price. It's not that far away from where we're sitting right now, but the expectations are for crude oil to continue to rise. And keep in mind, like energy prices and crude are a huge factor in what we've seen with inflation. Even a hot print in CPI a week or two ago, I can't even remember when it was. I believe it was last week. Shocked the market, but we got a pretty significant rally, right? And those inflation measures are going to be very, very closely watched. Speaking of inflation and economic news, the turmoil continues in the UK, right? The UK has seen a very, very substantial inflation number, and cost of living crisis continues to batter households as well as businesses in those more developed nations and economies, with food, energy, transport, and household goods all being a combination of contributing factors. So a double-digit increase was first seen in July, but then returned to 10% mark with another alarm from or for the BOE, which will likely force an aggressive act in November, potentially 100 basis point hike. Now, naturally, we've seen that the BOE has been backpedaling and front pedaling, going back and forth in terms of quantitative tightening and easing. So in the bigger picture, the UK policymakers have already dealt with financial meltdowns over the past month as the sterling, right? Sterling got beat up, stocks got beat up, and the government has since reversed nearly all of its proposed tax cuts, as well as less generous relief on household energy costs. So the Bank of England still expects to go ahead with its quantitative tightening program from November, though it will sell short and medium dated bonds with a 30-year gilt at the center of the recent fears plaguing the pension industry. So they're kind of mix and matching here. I don't know how that shapes up, but I guess it's something that we're going to have to see unfold in the coming months. So it's going to be pretty interesting to see how the Bank of England manages to financially engineer this with levels and the ES S&P futures. We got this guy up and running. We have a very, very pivotal level at the 3702 to 3700. That's going to be a huge area that we saw get tested yesterday. Worked really well. We got a very strong rally into the end of the day off of those regions, and right now we're coming back into them. So if that gives up, if we get a pretty significant drop from that area, realistically, we're going to see a pretty strong meltdown to 3684 probably is going to be a target, and we can continue to push lower. Right now, we're still testing that area. 3714 area, massive resistance. So above 3714, I think they could readjust and look for a little more of that upside push into the 3732 area. But realistically, 3700 to 3702, that's an area that we all have to watch, because if this gives up, if this gives away, the large drop is going to open up fairly quickly. And right now, we're still holding that area. We're still holding here pre-market. We've got about 20 minutes until this market opens, and we'll see how that shapes up. So realistically, markets have been getting slapped from that key resistance around 3773-ish, 76, right? And that's going to be a huge resistance point that we're going to have to keep in mind going forward today. So let's see what we get into the market. Remember, 3700 region is going to be the main area of interest for us as we get close to this market open to see how this reacts, right? If we send aggressive longs from that area, we can see a pretty significant rally in this market, and we'll see how that shapes up, how it holds out. But again, yesterday I did make some mistakes, right? I was looking for the longs kind of closer to the open before flipping to the short and making all the money to the downside, but took some losses trying to pick this up long. And I don't want to come in with that kind of idea today, right? I don't know. It's a huge support, of course. If you're going to try it once. If it goes, just cut the loss very quickly and then see how we can actually open up some of that downside. But again, there's the other aspect where we're at a key support zone. Do you want to be selling into that? Give it some time, let this thing shape up in the first 10 to 20 minutes of the market, and we'll go from there. So I hope the first 10 to 20 minutes of the market, and we'll go from there. So I hope everyone enjoyed this update. Little change in scenery yet again. Have a great trading day. We're going to be opening up our trading rooms and seeing what we got going on, and we're going to be identifying trades together, right? That's what we've been doing over the past few days pretty successfully in the futures and options market. And check that out at community.tradeproacademy.com. We'll see you guys there, and take care. Have a great Wednesday. We'll see you tomorrow, and we'll wrap up the week on Friday.